But yes, the DII buying continues while FIIs continue to be on a selling spree. So what is it that you should be doing as an investor? Let's take it across to Feroze Azeez and find out exactly that. Feroze, hi, good morning. Good to have you on the show. So much uncertainty around, right? And I guess the market also seems to be indicating that. But there is the DII buying, which still continues. What's the screen telling you? What are the internal indicators that Feroze Azeez maps telling about the market direction?
Aisha, good morning. I personally think that the indicators, now if I break it down to even Trump's surprise that he's trying to scare the Indian capital market and he's not getting any reaction, his negotiation tactic to crack at least one large economy is not seeming to work. That's not seeming to work because the earnings growth has been 11% for Nifty. If you keep constant constituents, there are 7 reasons why. Okay, so if your viewers, I personally think that they may want to know what those 7 reasons are, why the market is behaving very differently to the expectation or the news flow. One is earnings of Nifty last financial year was not 6.5% as reported, even on NSE, because there were 4 constituents which changed in NSE over the last 1 year. If you keep constant constituents, the earnings growth of the current constituents of Nifty was 11%, not 6.5%. That's point one. Earnings has been double digit. For NSE small cap, everybody said the earnings are not good. There were 63 changes in NSE small cap 250. If you ignore those changes, the earnings growth was not -9, it was +18. So the narrative that the earnings have not been good is incorrect because there are stocks which change. So you have to compare the same stock with the same base. You can't compare Anand Rathi Wealth Limited's earnings of this year with another company which it replaced last year, which was there a part of the index. So that's one anomaly which the industry keeps doing. So earnings have been healthy. Domestic institutions are putting in money, and I don't think they're putting in money, so much money. It is still 6.2% of the total household savings. Gaadi start nahi ho rahi thi. Then you're pushing the car and you're pushing it at 5 kilometers per hour. Once it starts, will it go at 30, 40 kilometers per hour? The answer is yes. But it was the whole cult of investing at least double digit of the Indian household savings in equity we couldn't do over the last 2.5 decades. So when direct tax code, the new tax regime has come, people are being given money in their bank accounts and they're deciding equity. So there are derivative indicators, 3 out of 4 tell you that there cannot be a major correction. Very, very strongly, they say that every fall will be bought into.
Quite interesting. The other interesting thing, Feroze, that, is playing out in the market is this fast-paced sectoral churn. Very earnings specific. Now within private banks also, you've got a very, very clear hierarchical order as well going in there. Where is money getting concentrated as a pool right now in terms of flows and the other parameters?
Aisha madam, agar aap dekhte hain, when you look at them, if you look at each sector and break down flows and ownerships into different buckets, the domestic institutions are betting on banks heavily. Their active weights have gone up on banking. Banking already in Nifty is 31% weight and 24% weight in NSE 500, which is the domestic mutual funds money, which is what they track as their tier 1 benchmark. So coming back, where's the money headed? The domestic money is completely getting skewed to the banking sector. Of course, like you said, there is a hierarchy. Why is that happening? Is because the foreign institutional investors, if you break it down into 3 categories, and they should mandatorily be broken down into 3 categories, in spite of they all being called FIIs. One is index fund investors, active FIIs, prop FIIs. Index fund investors have not taken 1 rupee out in the last 4 years. They've added money in India. But the discretionary fund managers in the FII or the hedge fund guys have pulled out money, is why you see a net negative. The prop guys, like institutions in education institutions, are one of the largest investors in Indian mid-cap and small cap, like the Harvards of the world. Those guys have taken out money because Mr. Trump has choked their fundings. So this is how they're behaving. So coming back, the ownership has changed because weightages have changed in different stocks. If people are not giving impetus or giving emphasis to the weightage change in indices, I think they will miss out on understanding demand and supply in each sector. Like pharma has one of the biggest troubles, but it's 4% weight, has a free of almost about 47% in NSE 500. But that's not moving the needle in terms of earnings because of its lower weight.
Oh, yeah, absolutely. Banks have such a large weightage that, of course, that's where, the stickler for funds actually lies. But where is the next banking pool? Where is the sector, Feroze, that you think the next leadership is going to come in? What's the next bank?
I personally think it will be very contrarian to say that because I look at larger time frames because of the nature of the business I am in. If I'm looking at 3 to 4 years, not 3 months to 6 months, which most of your audience might be interested in, I'm looking at those sectors which can beat Nifty by about 3 to 4% compounded over the next 3 years. Surprisingly, I'll count auto in it and IT in it. These two sectors, like IT as a sector, which is 25-27% lower than its peak. IT index, Nifty IT has about 10 stocks. The earnings last year was 10.7 on a constant constituent basis. This quarter, where Nifty IT's earnings are about 10.3%. Earnings are being ignored because of a lot of other ownership changes and the bad news which you have on the geopolitical side and external side. We export, our services export is $36 billion. That is not getting too impacted. $81 billion of goods export is getting impacted. $15 billion of goods which are exempt from the tariff are not getting impacted. So, but there is a little overhang of all this trade war thing on IT. I personally think Nifty IT can beat Nifty by about 3 to 4% compounded over 3 years.
Really? So when you say IT, you mean pure services, or do you now mean tech as well in that? Because a lot of consumption plays which have the tech element are the ones actually where leadership is.
See, tech now, there is some new age tech-based consumption, even in Nifty, right? I don't know how you, but in Nifty IT, there is no representation yet. But either way, if you're speaking about those stocks which are new gen stocks, which are a part of Nifty, I personally think those which are not profitable businesses today and use IT platforms for their business, I personally think that is not at all an earnings play. That is why you see such high beta there. Now, like you flashed Eternal on the screen. It's not an opinion on Eternal completely. That's my disclaimer. But so it became part of Nifty last year, right? Once it becomes a part of Nifty with 1.86% weight, EPFO has 8 lakh crores or 7 lakh crores in Nifty. So 1.8% weight of 7 lakh crores is a straight 15,000 crores. So what happens is when large stocks get listed, they suddenly come into these indices and the first flow comes from passive. Then the trader says, pure threshold resistance break ho chuke hain, the trader comes. Then the fund manager, who's an active fund manager, tries to create a retrospective story that I'm missing out, but there is some case here. Actually, there is no case. From a profitability standpoint, it is the vicious cycle of passive flows. As soon as you get listed, after 6 months, most of the indices do a review and you've suddenly come into the industry or the listed space, you will suddenly get a weight to your size. Now, tomorrow, if like NSDL IPO gets listed, it is not a part of NSC Capital Market Index with Motilal Oswal formed. But once it is listed, it will come into that index. BSE is the largest stock in it, and Nifty, HDFC AMC is the largest stock. It might become the third, fourth largest stock. So a lot of money needs to move from other 15 or 14 Nifty capital market stocks to NSDL. So this phenomena, I think the market is missing. And that's why so many businesses, when they get listed, they get an impetus from passive funds. Then the trader sees all the charts and say, oh, flag pattern ban gaya, isme ghusta hu. Phir manager then says, yeah, what did I miss? And then he tries to create a report, the sell side analyst justifying those valuations rather than searching for valuations beforehand.
That's such an interesting take, Feroze, and we will definitely play your sound bites time and again because it's very contra to the opinion that we're hearing on the street. But great chatting with you. Thank you for your time. In fact, here's Samir Arora from Helios Capital saying exactly the opposite. He expects around 12%